Hello and welcome to the weekend market update. You're looking at the chart of SPY, the 4-hour chart. So this is the update for 10th of December. So 4-hour chart. SPY was down almost 3 points on Friday to close at 393.28. So just wanted to look at shorter term picture, longer term picture to see what sort of trend we are seeing. Now you'll notice that SPY has been making a series of higher lows. So you can see low here, higher low, higher low, higher low, higher low. So that has been going on for a while until this week when SPY made a lower low. So this low is lower than this low. So it would seem that this sequence of higher low has been broken this week. Now, if we look at the highs, you can see that it also has been making higher highs. So this is a high, this is a higher high, and this is a higher high. But if you look at the 1-hour chart, you will see that the trend seems to be changing. So if you look at 1-hour chart, this is a 1-hour chart. You can clearly see in the 1-hour chart, you have a low here, you have another higher low, higher low, higher low, and then this low is now lower than low. Even on 1-hour chart, we can see the higher low sequence has been breached. But if you look at the high, you would see that this is a high, this is a higher high, this is a higher high. But look at what's happening recently. See, this high is lower than this high, and this high is lower than this high. So on an hourly basis, we are now beginning to see lower highs being formed. And obviously we have a lower low. So this is a low and this is another low. So on an hourly chart, we can clearly see the trend has changed from being higher highs and higher lows to lower highs and lower low. Even on a 4-hour basis, you can see that you can actually see the lower high right here, this candle, and then this high. If you can consider this high to be lower than this high, so you can also see lower high being formed. So if that's the case, then this uptrend, which was making a sequence of higher high, is now beginning to change. So this is noteworthy, and I think this is potentially signaling perhaps weakness is beginning to come in. Now, if we do have weakness, then what are some of the levels we should look at? I mean, we look at levels both on the upside and downside. So this line, which is around SPY 390, is an important level. You can see support right here. This became resistance, resistance, support. So 390 is a very, very important area. If 390 is breached, then this zone right here, which is around 370 to 374, would be the next level. Yes, there is a gap here to be filled, but I think this area would be the next logical place for it to move down to. And below there, the next level would be this low, which is around 357-ish. So those would be the levels to look out for. On the upside, the resistance, I think, is this number, 403. Because if it goes up to, if it rallies and gets rejected at 403, what do you have? You have a left shoulder, you have a head, and then you have a right shoulder if we get a rejection of this level. So then what happens is that you have a head and shoulder pattern if there is a rejection at 403. But if 403 gets taken out, then I think that's quite bullish. In that case, the previous high, which is around 410, I think would be at risk of being taken out as well. And obviously that would mean that this downtrend, the bear market downtrend, could also be at risk. So I think 403 then is an important level, and 390 on the downside is an important level. So those would be the levels to look out. So if we look at on a daily basis, and let's have a look at the momentum indicators to see what is the momentum indicators telling us. MACD crossed, now it's moving lower. Are we going to have something like this where it crossed and then it goes down and eventually crosses below the zero line? It hasn't crossed below the zero line yet, so we need to wait to see whether or not once it crosses below the zero line, this indicator will turn negative. It's still positive because it's above the zero line, but it is moving lower. So the momentum is weakening. Just be aware of that. But below the zero line, that's a no-no. RSI is at the 50 level. It closed just below the 50 level. It's closed at 49.58. So you can see that it bounced off the 50 level this week. The question is whether we're going to have a follow through and go below the 50 level. If so, RSI will turn negative, which means then once both MACD and RSI are in negative territory, then I think the bias would definitely be to the downside. So we can clearly see that the price is now beginning to make lower highs and lower low, and the momentum indicators have started to move lower. So something to keep an eye on. Yes, stochastic is now moving into an oversold territory, but if the momentum indicators do not turn up, then I think the bias would be to the downside. Let's have a look at the weekly to see what do we see on a weekly chart. On a weekly basis, this week's candle was bearish. You can see, I'll just zoom out a little bit so you can see. Last week's candle was positive because we have a doji candle right here, which is this red candle, and then there was this candle just closed just below this candle, and then last week's candle was quite bullish, but this week completely reversed it, and it closed just below the previous week's low. See this candle's low, so this candle's closed just below the week before's low, and this candle is not looking good. This is a bearish looking candle. If you look at the momentum indicators, RSI had gone above the 50 level. This green line is 50 level. This week it closed just below the 50 level, 49.23. Is RSI doing something like this here and here, where it briefly went above the 50 level and then moved back below? If so, that's not good. You can see that when RSI is above the 50 level, right from here up until here, good things happen to price. From here, when RSI fell below the 50 level and remained below the 50 level, we see the price had a downward bias. So right now we're seeing that it's not able to hold the 50 level. So if it falls further and remains below the 50 level, then I could see additional weakness. MACD obviously is in negative territory because it's below the zero line. It did cross here. It was heading higher. It's still moving higher. The question is that going to do something like here, where it moved up and then we had another cross to the downside? If so, that would be negative. So at the moment, the momentum indicators are negative. So it's showing that the chart is more bearish than bullish. If I look at the monthly chart, now I'll just bring the moving averages. You will notice that last month's monthly candle was positive. It had closed above the monthly 20 EMA, this green line. And thus far, I mean, we're still early in the month, thus far it has now fallen below the monthly 20 EMA. So, I mean, we still have a lot of trading left before the month is over, but the monthly candle so far is looking weak. If we look at the monthly MACD, continues to move lower. So this is showing that momentum is still negative. RSI, which had gone above the 50 level at the end of last month, has now gone below 50. It closed at 49.77. So RSI is weak on a monthly basis. So on a monthly basis, the momentum indicators are still weak. And you can see MACD is heading lower, heading towards the zero line. But what we need to see is whether or not it's going to cross below the zero line. Something like what happened in 2008 when it crossed and fell below the zero line. So it's still quite a bit above the zero line. So we'll come back to this in coming week or so just to see if we see this continuing to move lower. But I think you will see when we move to QQQ, you'll see what's happening to MACD. I think it's something interesting happening. Just to summarize SPY, momentum indicators on a monthly basis is negative. Price has now gone below the monthly 20 EMA. which is not positive. Weekly is momentum indicators are now negative. So and on a daily basis, you can see that MACD has crossed, moving lower. RSI is hanging in there at the cusp of going into becoming negative. So if that's the case, then I would be cautious on SPY. Now that said, we've got CPI coming in next Tuesday. So let's have a quick look at the CPI just to see what we can learn from it. Now, so this is the inflation rate year over year. Market last month, the reading was at 7.7. This month, the consensus is that the reading should be at 7.3. So let's have a look at a little bit deeper. So you can see last month it was 7.7 down from 8.2. So this was obviously positive. Now we're going to get the reading for the month of December, which is expected to come in at 7.3 right here. Now notice one thing, we're going to compare the December prices of goods and services to a year ago level. So to this, you see this bar right here. Now notice one thing, that from October of 2021 to November of 2021, inflation CPI jumped from 6.2 to 6.8. This was a 0.6 of 1% increase. So therefore, the year-over-year comparison should be friendly. But is that going to be friendly enough that inflation drops by 0.4 of 1% that the market is expecting from 7.7 to 7.3? I'm not sure. I mean, if the expectation was 7.4, I would be a lot more comfortable that maybe the number would meet the expectation. But right now, the market is expecting 7.3, which is almost 0.4 of 1% lower than the previous reading, when inflation rose by 0.6 of 1%. Is that possible? Not sure. If you look at October, you see in October, inflation dropped by 0.5 of 1%. But if you look at what happened from September to October, inflation rose by 0.8 of 1%. So on an 0.8 of 1% increase, year over year, we saw a 0.5 of 1% decrease. So I don't know that on a 0.6 of 1% increase from October of November 2021, we're going to get a 0.4 of 1% decrease so that the number meets expectation. Now the other question to ask is, okay, what happens if inflation comes in at 7.3? Would the market be satisfied because it has met expectation? What happens if it comes in at 7.4? Would the market be disappointed? Even though 7.4 is quite a bit below 7.7 and it's moving in that direction. Let's say the number comes in at 7.4 and you can see the trend is clearly down. Would market be satisfied with 7.4 even though it's well below the 7.7 the previous month? I mean, I can see if the number came in at 7.5, the November number, I can see the market getting disappointed because market would expect more than a 0.2 of 1% decrease. But I don't know whether whether the actual number is going to be at 7.3, or is the expectation so high that it is setting up for a big drop in the market. So I think we need to wait and see what the reaction is. But market is expecting 7.3. It could come in at 7.3, but could be challenging. I would have felt a lot more comfortable if the consensus was at 7.4. Now, if you look at the core was at 6.2. Core is expected to drop to, so let's see, where is core? Okay, so here's core. Core came in at 6.3. It's expected to drop to 6.1. Now, if you look at what happened to core from October of 2021 to November, there was a jump from 4.6 to 4.9%. So does that mean that core can drop from 6.3 to 6.1? Possible. So that's about inflation. So obviously inflation is going to, CPI reading is going to play a key role. But I think the levels to watch on SPY would be the 390. If 390 breaches, then it opens up, levels like right here. Let's look at QQQ and see what we can learn from QQQ. So let's have a look at the 4-hour chart. So you can see that on a 4-hour chart, it's been trading in this box for a while. Now it's now not too far from the bottom of this, bottom. If you look at the structure, you can see that since reaching a low here, it made a higher low here and a higher low here, and it hasn't yet bridged that. You could say that it has made an equal low, but it hasn't made a lower low yet. On the other hand, if you look at the high, this was a high here, this is a higher high, and this is a higher high. So at least on a 4-hour basis, the higher high and higher low is still intact. If I look at the 1-hour chart, do I see something different? I don't. I can see that this was a high and this is still a higher high, and this is a low and this is an equal low. So the structure hasn't changed for QQQ, but this is an important level. So this one is what? It's about 280. If 280 is breached, then the next area would be this zone, which is around 260 to 263, this zone. Yes, there's a gap to be filled here, but I think this two would be the levels to look out for. And below that, obviously, we'd have to go back to the previous 52-week low, which is around 255. So I think this is an important level. Now, resistance would be obviously here, which is around 294. If this number gets taken out, then game on. Then obviously, then higher high continues. I mean, the structure is better looking so far for NASDAQ. At least it hasn't made a lower low, but if you look at a daily basis, it's just going sideways for the time being. If you look at the momentum indicators, MACD has crossed, it's now moving lower, but it's still above the zero line. So I'm willing to give the benefit of the doubt so far because it hasn't gone below the zero line. If it does this, then I would be a lot more bearish. RSI is just below the 50. It's at 49. It's trying to hang in there near the 50 level. So let's just give the benefit of the doubt to RSI because it can easily reclaim, sometimes it can undercut. What would happen, I mean, if it were to fall well below and stay below the 50 level, that would indicate that there is more price acceptance below the 50. So let's just give the benefit of the doubt to, RSI for the time being, even though it's just below the 50 level. So I just want to see whether it recovers or it remains firmly below 50. But definitely, I do accept the fact that the momentum indicators are weakening. If this level breaches the 280, then obviously that would be negative. On a weekly basis, what do we see? The weekly candle, although it's negative, but it's not as bad as S&P 500. You can see that it's still closed above the last week's low. I mean, S&P 500 closed fractionally, ever so slightly below last week's low, but QQQ hasn't. So QQQ's the candle location of the candle is not bad. But what is negative are the momentum indicators. Look at RSI, rejection at the 50 level, this green line. MACD, quite weak, well below the zero line. So that indicates that, sustained rally is unlikely because these momentum indicators are still negative. If you look at the monthly chart, so let's look at the monthly chart. So I've got the monthly moving averages as well. So let's look at, so you can see right now, see this one is September's candle. It had closed below the monthly 50, but then in October and November, it reclaimed the monthly 50. I think the monthly 50 is an important level. If it falls back below monthly 50, that would be negative. So the monthly 50 is at 275. Now we still have a long way to go before the month ends, because you see the last two monthly candles were bullish because you see long wicks at the bottom. But if this month's candle completely falls below the monthly 50, then those two bullish candles will start to take on a more bearish look. What's concerning me is this MACD. You can see the MACD is now come to zero level, and it's now about to go into go below the zero level. I want to see the last time, and you can see RSI is below the monthly 50. So RSI is definitely negative, and MACD is about to cross below the zero level. So let's have a look at the last time when this happened. Last time when this happened was in 2008. You can see right at this point, the black line just went below the zero line. And look at what happened. There was a big drop in the price. So when MACD goes from positive to negative and crosses below the zero line, that's really negative. And you can see what happened to price. All these big decline in price happened when this black line just crossed below the zero line. And you can see at the same time RSI was also fell below the 50 level. If I look at the previous time to that, well, it doesn't have. Let's look at NASDAQ. You can see where there's data. There's NASDAQ. You can see NASDAQ also. This is 2000 sell-off. Right here, when the black line crossed below the 50, below the zero line, you can see that it continued to make additional lows. You see, from this red candle to this low, NASDAQ had fallen almost 35 to 40%. So the point I'm making is when MACD goes from crosses over and falls below the zero line, that could be significantly negative for the market. You can see big drop. Even here, you can see the big drops actually happen when MACD crossed below the zero line. Right now, we are at an inflection point right here. You can see the black line is right at the zero line. If it goes below the zero line, and at the same time, if this month's candle closes below the monthly 50 EMA, that could signal something big could happen on the downside. If you look at IWM, you can see IWM's monthly MACD. See, the black line is now well below the zero line. Is that going to cross and move higher, something like this, or is that going to do something like this in 2008, where it was showing sign of making a cross at the zero line, but then it fell off. And then look at what happened. There were big selling, when MACD fell below the zero line. So I think both NASDAQ and IWM, QQQ and IWM are at a critical level from a monthly perspective. You can see IWM is on the verge of falling back below the monthly 50. Obviously, the month is not over yet. If it closes below the monthly 50, and if this remains below the zero line, then I would be quite concerned about what could potentially happen. So there are some warning signs. The monthly chart is definitely looking a lot weaker, and you can see for IWM there is a rejection at the 50 level. So I'm not liking what I'm seeing on a monthly basis, because this is an important time frame. So we need to pay attention to what's happening on a monthly basis. So QQQ for the time being. So let's go back to QQQ. 280. I'm watching 280. If 280 breaks and these two moving and MACD on a daily basis goes below the zero line, then I could see 260. Then I could see lower prices ahead. So I think we need to be very cautious. There could potentially be a fairly big drop in the market if that were to happen. If we look at other market, dollar. Let's have a look at dollar. So dollar, it's forming this falling wedge. It's forming this falling wedge. You can see momentum indicators are weak, but MACD is beginning to form a base here. RSI is also basing here. So I'm thinking that maybe DXY can rally. If DXY rallies, that could potentially put some downward pressure on SPY and QQQ. If you look at the weekly chart, so on the weekly chart, you can see that it's at the weekly 50. But the momentum indicators are weak, but they're oversold. You can see RSI is below the 50 level. The question is, if we have a rebound, whether it can get back above 50. If it gets back above 50, then the momentum will become positive. And MACD, which is now moving lower, heading towards the zero line, is that going to flatten out near the zero line? So I think we need to watch DXY, but on a daily basis, because it's oversold and because of this falling wedge pattern, I get the feeling that DXY could move up a little bit. If that happens, then what happens to VIX? VIX has been falling. I can see that VIX MACD has crossed here. It's moving higher. So it's like something like this. Is that going to cross above the zero line right here as it did? If it gets back above the zero line, then the momentum would be positive again. Look at RSI. RSI has now come back up to the 50 level. Now 50 is an important level. Right here you can see that last time when it crossed above the 50 level and pretty much remained above 50 level, you can see VIX continued to move higher. So this is at an important level. We have a cross right here, and then if it gets back above here, I could see VIX going up. But if VIX gets rejected here and then MACD kind of flattens out, then yes, maybe we could see lower prices. But I'm watching whether or not it can get back above the 50 level. If it gets back above 50 level and holds it there, then I think MACD will continue to move higher and eventually cross above the zero line. So this is another data point which is kind of concerning me. What about the rates, yields? What are they telling us? So if you look at, so let's start off with the futures. So these futures are all pointing to the fact that terminal rate would be around 5%, between 475 to 5. So the April one is at 489. June Fed funds futures, this is the June one, which is at 4.95, almost 5%. But if the CPI comes in, let's say at 7.4 or 7.5, I could easily see yields backing up above 5% and moving the terminal rate to go. So at the moment, the market is expecting Federal Reserve to pause at 5%. But if CPI comes in at 7.4 or higher, I could see the terminal rate expectation going up to 525. And that could potentially put pressure on the market. So I think the CPI, will tell us a lot about where the Fed might be, heading. Is the terminal rate going to be above 5%, 525 or 5.5? Those numbers are not yet, factored into the market. If that's the direction the market yields are going, then I think the market, could fall quite a bit from here. If you look at the 2-year has been hanging around, but is well off the high. You see MACD has pulled back. Now it's near the zero line. Is that going to start to curl up and move higher? If so, and if it starts to get back towards the previous high, that should be negative for stocks too. Even the 10-year yield, which has fallen quite a bit, almost a full percent, it fell to below 350. It's also starting to move higher. So if yields start to move higher, dollar starts to go higher, that could potentially be negative for stocks. The only positive data point I'm seeing is oil. So this is oil. This is the weekly chart of oil futures. You can see it had made a new weekly low. So this is definitely pointing to lower prices. So this would be the only positive data point I see. But when I look at the dollar, when I look at the yields, when I look at VIX, they're all pointing towards higher prices ahead. And when I look at the monthly momentum indicators for SPY, QQQ, IWM, I see that the monthly momentum indicators are weak, weekly momentums are weak. So I'm sort of cautious right here as to whether or not market can rally at all. Now the CPI can change all of that, and the Fed's decision on Wednesday can change all of that. But I think over the next few days, I think we need to be cautious, at best. That's all for today. Thank you very much for watching the video.